Hello and welcome to CTV News Channel. Thanks for joining us. I'm Akshay Tandon. The Bank of Canada has decided to cut the key lending rate by 25 basis points. That means the rate is now at 2.5%. The cut was largely expected after inflation data from StatCan showed consumer prices rose by 1.9% in August year over year. In its September interest rate announcement, the central bank reduced its target for the overnight rate by 25 basis points, which now sits at 2.5 as we told you. The Bank of Canada says that global economic growth is showing signs of slowing amid higher U.S. tariffs and ongoing uncertainty.
After remaining resilient to sharply higher U.S. tariffs, global growth is now showing signs of slowing. U.S. consumers are cautious and employment gains have slowed. U.S. inflation has picked up in recent months as businesses appear to be passing on some tariff costs to consumer prices.
With me now is Sean Cooper, mortgage broker and author of Burn Your Mortgage. Sean, good evening and thanks for your time. So talk to us about what are you hoping to see the impact will be on the housing market with today's cut?
Yes, a great point. I definitely think it's a positive development. The single biggest driver of real estate is interest rates. So when interest rates go down, then that encourages more activity in the real estate sector and helps with the cost of borrowing. So I definitely think that it is a positive step in terms of that.
So explain to us, how will this affect the mortgages, whether they are fixed or variable?
Yes, great point. So this only affects the folks with variable rate mortgages. It does not affect the people with fixed rate mortgages. Fixed rate mortgages are impacted by the bond market, which is something separate and apart. So if you have a variable rate mortgage or a home equity line of credit, when lenders lower their prime interest rate, which they do in response to the Bank of Canada lowering interest rates, then you will save money and your payment will go down as well.
Sean, explain to us, what do you think will happen to home prices now? Because you see both condos and home markets, they sometimes react very differently when it comes to a drop or an increase in interest rate.
Yes, so under normal circumstances, interest rates going lower would mean that home prices go up. But the wild card here is the softening of the Canadian economy. If the average Canadian is worried about having a job tomorrow, then that's going to cause them to hesitate to go into the real estate market. So if we had a good economy and interest rates were going down, then we could see more activity, but it really remains to be seen how this really spells out until we have some more certainty with our economy, specifically like a new trade deal with the US. That would certainly help a lot.
Sean, talk to me about that activity you just mentioned. When you speak with your clients, what do they tell you? Because so many people have been on the sidelines waiting to see the rates to fall. In the meantime, inventory has been lying in the market, for months at a stretch. So what are people telling you? What's the buzz been like today with your clients?
Yes, I definitely think this is a positive development. People were concerned when the Bank of Canada stopped lowering interest rates. We saw the last cut in March, and then we didn't see any more interest rate cuts after this. So I certainly think it's a positive development. And if we see another rate cut in October, definitely will help anyone that currently has a variable rate mortgage or is thinking about coming into the market. So certainly, I think it's a positive development.
And what would you tell people who are seeking some advice right now in terms of buying their first homes, to wait it out, to see what happens in October, or to go ahead? What would you say?
Yes, at the end of the day, I mean, it's only another possible quarter point cut in October if we end up seeing it. So I wouldn't necessarily time my buying decision in terms of that. If your employment situation is stable and you run the numbers with a mortgage professional like myself, and you're not overextending yourself, I definitely think now's a good a time as any to get into the real estate market.
Sean Cooper, appreciate your time. Thank you.
My pleasure.